Why am I blurry? Hold on, I'm blurry now.
Hi, this is James Ing with Full Capital. We've got Merrill and Jeff here representing their respective firms. Thank you guys for joining. Um, I wanted to bring you guys on just to really get a feel for you guys to introduce yourselves first, and then we'll get into the company stuff. So, Merrill, let's go with your introduction. Let's kick it off.
Okay, so everybody knows I'm the smart-ass, transparent lawyer. I've got Kaliser and Associates. Uh, got two other partners that work with us, Cindy Merlis and Greg Ehrlich, and have been practicing law for way too long, 26 years. Former corporate bankruptcy lawyer. We represent people that are buying, selling, developing just about any type of commercial real estate asset on the transaction side. And then we also represent them when it comes time to raise capital via accredited investors, family offices, pref equity, or QPs, qualified purchasers. Um, I also have a little bit of experience in multifamily as well. So we empathize with some of the challenges and in getting debt and raising capital, and have some unique advice from both the business and the legal side to help people out.
All right, perfect. All right, Jeff.
Yeah, so I'm one of Merrill's partners. I'm also one of the founders of Dynamic KPIs, which we kind of built to solve our own problems. We have multiple businesses, multiple asset classes, multiple managers, and multiple software platforms that manage all this. So we created a way to integrate into each one of our systems in order to pull out the data that we need to give us kind of a daily snapshot of how our businesses, how our assets are performing. Rather than diving through dozens of spreadsheets, dozens of systems, and dozens of reports, we do this to proactively look at the condition of our property and our assets and to take action in a very quick and decisive manner.
Okay, so we're gonna start with Merrill because he might have a meeting to run to. But
Well, I thought we just
Merrill,
did it.
So Merrill,
Yes.
let's. So what's going on the legal front? Let's say in the last, let's say 6 months or so. What are people calling you guys about right now in terms of maybe new deals, maybe existing deals that they're having to sort of work through? What are people seeing in today's market right now on the legal side?
That's a very good question with multiple subsets that you already know the answer to, but our audience may not know the answer to. So if you've been living under a rock in the last, I would almost say year and a half, um, this will come as a shock to you. If you haven't, this will make sense. I would say currently about 70% of the business we're working on are loan modifications,
Okay.
workouts, pre F word. Can't use the F word at a lender convention.
Okay, pretty
But
F
I'll
word.
say it, foreclosure.
Okay.
Um, and trying to navigate through some of the HFCs and PFCs that seem to be going away now. So that's about 70%. We have seen an uptick in acquisitions. What we haven't seen is the success rate of closing them like we had, let's say, 2 or 3 or 4 years ago. And I think it's imperative that when especially new groups are out there seeing some really good deals, they have their lender lined up before they even submit an LOI. James, we've worked with you a lot. Our clients, most of our clients work with you guys. You know, they still come to you and they know that there's no guarantee by any means, but hey, here's the asset. You give them a ballpark of, yeah, we should be able to get this, or no, this one is not going to work. It's the clients that wait too far into the process and have spent a bunch of money, find out one, the debt doesn't work or the debt changed, or two, even worse, they have no ability to raise capital whatsoever. And so I think I don't know what's happening right now, but I think people are very eager to get into deals, but they still need to go back to the basics and obviously line up your law firm clearly, but really want to be talking to your debt broker and any potential capital raisers that are in your deal and really understand how much do they really think they can get in, and whatever they think they can get in, multiply that by point 0.2 or point 0.3, and that's what's coming in.
So if you think you can raise 1 million, it's really 200,000.
Right, right.
Yeah.
And soft commitments are like toilet paper, except toilet paper is softer.
It's
Um,
softer and more useful.
100% more useful than a soft commit. Soft commit, yeah.
The okay, so I want to follow up on two things.
Yeah.
So on the whole loan mod stuff, what
hmm
are you seeing people achieve in that realm? Like what is the typical lender doing when somebody comes and they're like, "Hey, I bought this deal in 22, I got a maturity in 25, and I need an extension." What are you seeing them do on that type of stuff?
So, James, I think it's incredible that you've given me 3 hours to answer that question, versus the lawyer answer that would say it depends.
Right.
So it does depend. I'll run through it real quick. As you know, there are hundreds of lenders out there, especially in 2020, 2021, 2022. Everybody seemed to become a private lender, right? We affectionately call them lovely bridge lenders. But everybody became a private lender, and private lenders at that time were one of the best gigs in town because their rates were, albeit floating, they were lower than what agency was. And so some people, many people chose to do that. The issue that we have now is all those 3-year terms are up, especially 2021 and the beginning of 2022. So those terms are up. And so there's a couple things going on. Can they even qualify for an extension? Many people that did those loans, they don't have the DSCR coverage to even qualify. And then the new value of the asset may not be as high as the owner expects it, or the owner may have unrealistic expectations based on today's cap rates, which is a whole nother argument in itself, whether they're actually real or not, because there's nothing really trading. So that's all kind of an expectation of what they should be trading at. So we find, as far as forms of relief that our clients work through, we've seen principal reduction, not a top one, but we have seen some lenders come out and start doing a little bit of principal reduction. The biggest is going to be deferral of payments and a deferral of the float. So like if you've got SOFR plus 440 points, the 440 we're seeing in many cases being deferred 3, 4, 5 months. Now, some lenders are willing to do that. Some lenders say, we're not granting extension. We don't want this loan anymore. By the way, we already wrote it off and you can just give it back to us. And so give it back to us in a perfect world would be just hand over a deed in lieu of a foreclosure. They don't want that. They want to actually foreclose to wipe the thing clean. So there's a lot of that going on right now. It's kind of under the radar, but it's not if you're looking at the court records. There's a lot of that that's going on right now. I think, generally speaking, the bridge lenders that kind of were hoping in 2024, survive to 25. Now I think it's like survive till the end of 25. Um,
Yeah.
but I think the hope of really reduction in interest rates and increase reduction in cap rates was going to take effect in Q4 2024. It didn't. And I think their kicking the can down the road mentality is kind of time's up. They'd rather kind of take their losses and redeploy capital that have essentially new bases because of kind of where the economy is. So these take a long time, takes a long time to get lenders to respond. The brokers like James definitely helps if they're involved in it. Not 100%, but just kind of the correspondence back and forth. Many of these loans have been sold and or the servicers have changed. And then you got to make sure if you're going to do a loan modification, include the servicer. Okay. Yeah, you're dealing with the lender. Those servicers, though, are very temperamental. And if you go around them, they will not do anything to help you get a loan modification, even though they don't have any real power. Trust me, you need to
They
be
have
friends
power. What
with
do you
them.
mean real power? Of course they have power. They're making every decision, it seems like, and they're documenting all these decisions, which is
So,
yeah,
in every instance we've had, at least on our experience, the lender jumps in.
to make the final.
Lenders counsel jumps in, representative from the lender jumps in, and the servicer is kind of off to the side. Um,
But the
that's just been
servicer
our
is documenting everything, right? I mean,
oh,
they're yeah.
clearly.
Yeah.
they've already documented everything.
Yeah.
And like I said, sometimes the servicers can actually help you get what you want, but when you stop communicating with the servicer, they are not your friend anymore because they're not being able to give the lender the information they need in a timely basis. So,
So they
long
look
story
bad. Yeah.
short, you need to be communicating. If you think you need a loan modification today, you should talk to your lender 3 months ago before you actually need it because it's going to take a while for them to get comfortable. And I know this is not advice by any means. Lender will take you more seriously if you're in default.
As in you're
I
not
know.
paying.
I'm not telling you to go in default. I'm just saying the lender takes you more seriously.
You come
If
to the top of the pile real quick, but not in a good way necessarily.
right. Yeah,
Yeah.
well, that's the thing. If
Yeah.
you're able to continue making your payment,
Right.
you're not a priority to the lender.
Yeah.
You can whine and cry, the boy that cried wolf, but until there's actually a wolf there, the lenders are too busy with all the other problematic children they've got.
Right.
So you do get their intention, even if you make a partial payment, that just wakes them up. Okay, maybe these guys are having cash flow issues. Maybe we do need to talk to them.
So maybe if the lender was running dynamic KPIs, they would get like a little yellow right there. I'm gonna
We're
transition over to
definitely getting your
dynamic.
commission and the kickback that I promised you before. You're the best, James.
So Merrill cannot say everything that he wants to say on camera. So you have to come in October to the big show and meet Merrill. Obviously, this little snippet is not enough. So Merrill, I'm gonna ask one last question of you, and I'll let you take it wherever you want to take it. What is something that whether you're buying or selling right now in Dallas, multi, what do those owners need to know from your perspective?
I was hoping you were going to ask me to tell a dad joke at the end. I'll save the dad
Come to
joke.
the booth for
You
that.
come to the booth
Yeah,
for the
yeah,
jokes. Yes, for the
yeah.
stand up.
Yes. I don't charge for dad jokes. So the question, just make sure I understand the question. So buying something in the DFW
Yeah,
market
if you
today,
had one thing, if you had one thing that your piece of advice for those people, owners in DFW right now on the multi side, what's your piece of advice from your chair, what you're seeing?
capital. Have your capital lined up before you even entertain anything. I know this sounds weird. Uh, Folks like James, they can find you debt right now. There's debt out there. And I'm not saying James's job is easy, but finding capital right now for most people is very difficult.
Equity
And
capital. Yep.
so, you know, if from what I'm seeing, and I'm in the market too, I'm not going after value add right now because those are the hardest to get financed and those are the hardest to find capital on. New construction in areas where there's not a lot of new inventory coming online, good markets. We also develop, big proponent of development, big proponent of development, not infill, but in emerging markets. But capital is key right now. And capital is debt. You're building your capital stack. The largest percent is going to be debt.
Sure.
You need to be best friends with James and his team because they're getting you the absolute cheapest capital out there. And so that's important. It's the 30% or 35 or 25% that's the most expensive is right now the hardest because of the current headwinds. So that was one thing with six subparts.
That's perfect. That is perfect. Well,
Thank
Meryl,
you.
I know you might have to run, but you can hang on, whatever you want to do. We're going to transition over to Jeff to talk about dynamic KPIs. I'm sure you've heard his pitch a couple times.
Yes.
So if you've got to drop, feel free to drop. But Jeff, I'm going to move over to you. Um, Jeff, talk to me about how people have used, because I think Merrill mentioned like 15 to 20,000 units are currently something like that being managed with dynamic KPIs. Maybe
Right.
talk me through how people are using the system right now um, to sort of manage their properties or asset manage their properties, right? Because they're
Sure.
not they're not necessarily the property manager. They might be an asset manager, right?
No, they're the general partners.
Okay, so it's
They're
asset
they're
management. Okay,
yeah, it's strictly asset management. And
okay,
just to start off, we didn't really set out to build a product. We set out to solve our own problem.
okay.
We were managing multiple assets. across different locations, different property managers, different platforms, and it was a constant headache for us. We were constantly logging into multiple systems, running dozens of reports, stitching things together in spreadsheets, just to kind of get the basic understanding of what was going on.
Okay.
It's very time consuming and it's very inefficient. So we built this for ourselves at first. It connects all of the major PM platforms. It pulls in fresh data daily and delivers that clear, standardized dashboard that I'll show you in a minute to our team. And we even send it to our property management companies because it's nothing like what they have right now. It's like a daily briefing. It tells us what matters, what doesn't matter, and specifically what questions that we ask our property managers. Our property management meetings have become a lot more efficient because we focus on the things that we need to ask about. There's always a story, and these dashboards tell you what questions to ask.
All right. I'm excited. I'm been sitting on the edge of my seat. Let's go to the tape.
Yeah,
Let's go to the tape. Let's see
let's
what.
just show a sample.
Okay, so yeah, whatever you have to show. I know this was last minute, but all right.
So this is just an exit. These are obviously some demo properties,
Yeah.
but this has really changed the way that we operate because it comes into us every single day, and because we have historical data, we can start to develop trends. So not only did it gives you the basic rundown on your physical occupancy, what's vacant ready, what's pre-leased, move-ins for the month, but it gives us all these collections on all of the properties that we have in our portfolio all on one page. It's
Okay,
not
so maybe start at the top and walk through why you've sort of what we're looking at, and then sort of why these things were honed in on, I guess, or chosen to be on this sheet, if that makes sense.
Yeah, so I mean, everyone, whenever you talk about the status of your property, what's the occupancy? It really two things. What's the occupancy and what are our collections like? Those are really the two main points. So that's what we want to kind of highlight in the beginning is here's not just what your occupancy is now, but let's take into account pre-leases, people that are, have already given notice that they're going to move out. That's what like our forecast occupancy. Who's there right now? Who's going to be coming in? Who's going to be going out? This is what we can expect to see, whether it's positive or negative. We also kind of show, and it's not reflected here, kind of just trends. Week over week, month over month. Are things up? Are things down? What are the changes that we're seeing?
Okay, so all right, so this top section in terms of property summary, that's really occupancy and then sort of pre-lease coming up. And then
Right.
the second one is really collections. All right, how much did you bill? And then how
Yeah,
much
how
is
much should
left
we
to
build? But most
connect?
important,
Okay.
because we have that historical data, we're able to show these trends, month
Okay.
over month collections. So we're able to look at this and ask our property managers, look, you're kind of collections are kind of trending on where you were at this time last month. What's going on?
Got it.
Where
Okay.
this property is kind of trending ahead of where it was last month. What are you doing differently? How can we apply those lessons to our other properties?
Okay. Keep scrolling. So this is on one page. Keep scrolling down. I just want to. So you got.
Yeah, so we
Uh,
talk about applications, we talk about trade outs, we talk about prospect visits. So we look at for guest cards, guest inquiries, prospects, every software calls it something different.
okay.
Where are these sources coming from? How effective are they? Apartments.com, we all use that. Facebook, Google, Craigslist, referrals. Where are leads coming from? And more importantly, where are they converting? We spend a lot of money on certain advertising, sources. And if it's not, if it's providing a lot of leads, but they're not really converting, maybe we should spend that ad money somewhere else.
Okay. All right. Keep going down.
All right. Then we kind of look into, vacant unit aging, how things have been aging, occupancy trends, lease renewal rates, what's been up for, renewal in a given month and how many have renewed.
Hmm.
If renewal rates are low, what can we do differently? We also look at work orders. I won't get into everything here, but we look at accounts payable. We look at move-ins compared to market rents as defined in the system. So when we have people that are moving out and they're paying above market, what can we do to save them? What is the reason? Maybe we don't give them a rental increase if they're already paying above market. If people are moving in, someone's moving in paying below market, we ask our PMs why, what's going on there. And
Okay.
this is before they move in, so we have time to adjust. It's not all after the fact. Same thing with lease expirations, pending renewals. Compare their current rent to market rents. If someone has a lease coming up for expiration that's paying above market, do whatever you can to keep them. If they're paying well below market, then maybe we don't want to keep them.
So in that case right there, um, oh, this guy's moving in. Okay, so move out.
Yeah, some people are moving out, they're paying above market. Well, why? Sometimes, it's nothing, it's out of our control, relocations or whatever.
Yeah.
That it's because they didn't like the rental increase or something else around
So
the
in
property.
that unit, you're thinking if the market rent is below what they were paying, don't even try to crank that guy, increase the rent at all. Just leave it as is because he's already paying more than
Exactly.
market.
What is it
Yeah.
going to take to keep you to stay?
Okay. Versus sending that guy a $50 increase.
Exactly.
Yeah. Okay.
Exactly right. It tells us all of this stuff in advance. And you can piece all of this from property management software reports, but it's taking things from various sources and blending it together. And we kind of do all of that and put it all onto a single page to present that consolidated view.
Okay. So are you sending this to the property management company on a weekly basis or
So
on
this
your
goes
call?
out daily. This goes out daily.
Daily.
We collect
Okay.
all of this historical data every day.
Okay.
And it goes to whoever the client wants it to go to. Some clients have it going just to themselves and their internal team. Other
Okay.
clients have it going to their property management companies where it replaces the reports. It also because this comes from the property management software, it keeps them honest.
Yeah.
We've had instances of, pre-leases not really kind of showing up.
Yeah.
And the question is, why? Well, we actually have some new leases. We just haven't entered them to the
You
system
didn't put
yet.
it in yet. Yeah.
It doesn't do us any
Yeah.
good if that's the case.
Yeah. This is only as good as the data that you put in.
Because
Yeah.
the PM software that generates your financials.
Yeah.
Those are where your financials come from. It needs to be as accurate as possible.
Okay. So we got move-ins, move-outs, renewals,
We have month-to-month
month-to-month.
residents. We have trade outs.
Okay.
We look at trade outs on compared to market, what was the net increase in rent, decrease in rent? Again, it doesn't give you this. There's always a story behind some of these. So we use this to direct our property management meetings to say, what's the story here? We are able to look at outstanding balances and to see whether some people are in eviction or not. If
Mm.
if someone owes $1,600, why are they in an eviction versus the someone who owes 3,000? Why aren't they being evicted? What's the story? It tells us the questions that we need to ask.
Yeah, that 13,000 is sticking out like a sore thumb right now.
Yeah, obviously, when you need to know what's the story, a story on that is why aren't they gone yet?
Yeah. Yeah, yeah, for everybody. Yeah. Okay.
So we also pull financial data. We look at, your income expense, net operating income, and then we're constantly evolving this again, and it's based on our need. We want to look at accounts payable. We need to look at kind of quarterly views. So we continually enhance this. And since we built this for ourselves, we're the primary user. We're not a software company that's, putting out what we think people want. This is based on our own management, and we're continually evolving it with client input.
So I think the only thing I did not see on here, which I think I would look at, um, is this total non-operating expense around CapEx. I feel like that is a black hole. So a lot of times people are tracking net rental, they're tracking expenses above the line, and they sort of see the NOI line, which is great. But then the real cash flow piece, and I don't know
Mhm.
if you have this on your sheet, but the cash flow piece on a monthly basis, that's actually what pays distributions, not NOI, right? So what's
Right,
my like cash at the end of the month? Am I feeding this thing, right? Or
right.
after CapEx? So that's
So
the only thing. I don't know if you have another one for certain people, but that's probably the only thing that I would want to see is CapEx on a monthly basis broken out by like the top 5 or 10 things
So
that
yeah,
in the
we do
non-operating. Yeah.
We do pull those details in. We have
Okay.
other kind of reports that are in there. The other thing we do is every Monday we send out alerts. And these
Okay.
are AI generated alerts based on historical data trends that are in all of the your properties.
Okay.
So if you're going down a level on the budgets, if you're, over budget by 10% on some certain area on one of your CapEx items, it alerts you to that. We
Okay.
do that every Monday, and it kind of does a more thorough breakdown of really, here's what you need to focus on.
So, um, we've got a couple minutes here. I want to hit two things. One is I think everyone agrees that this is helpful. Uh, I guess the only reason that somebody wouldn't use this system is the cost, and they've got something else better. So, touch on those two things in terms of how much it is to implement and sort of how you guys, if you guys have some sort of pricing on that, whether it's
Yeah,
per units or property or whatever it is. And then the second thing is talk about, how people are doing this now with this without this. And maybe they might be missing some things on that side. So I'll let you go from there.
yeah. So how people are doing it right now is, especially when you have multiple assets in the multiple locations, you have different PM companies. They'll use different software products, whether it's Yardi, Resman, Appfolio, whatever. So people that want to manage and keep an eye on their assets, they need to go into multiple systems, run a dozen reports, delinquency, collections, rent roll, budget to budget variance. They do all of these things, and what we've met people that do this, and they have their own spreadsheets, these master
Mm,
monster spreadsheets, multiple tabs. They have to manually pull all the data in. They have their own custom formulas in there to show them what they want to see. We do all that automatically in the background. We're able to present all of these as a consolidated view from all of these systems that all look the same. These reports all look the same. People that have, single assets and have a single system, those systems have reports built in. Some of them have dashboards. But again, it's for a specific property. This is more of a holistic portfolio view on the multiple assets.
got it. And then so in terms of pricing, what do people, if how do you guys charge for the product, and sort of how do they get started
So
if
we
they want more
do
info?
we do an initial setup fee based on the platform, and
Okay.
it's a one-time fee per platform. So, we have a setup fee to integrate into Yardi because we have to not only get access to it, we work with your property management team to get the permissions, whether it's Appfolio, Resman, Rent Manager. There's, a half a dozen systems that we integrate with to pull it, and each one has a different amount of work
Okay.
in order to kind of set things up, whether it's automated reportings, APIs, what have you. So, and if you add more properties on that platform later, we don't recharge it. This is a one-time fee on each client to set up their platform.
Okay.
And then as far as, pricing, we have pricing in terms of, price per unit. We'll charge as little as $2 a month. Two, we'll charge as little as, $2 a day for each unit.
Okay.
Uh, So
All right.
we kind of, people that have like over 100 units, it's really, we cap it at kind of a 200, 199 a month kind of fee.
Okay. Got it. Okay. And then if people, I know you'll be at the conference in October. If people
Yep.
want to maybe do a demo with you or talk through their specific scenario, what's the best way for people to reach out to you?
So really just come up to our booth. We'll have a demo.
Before October.
Oh,
If people want to reach out,
before,
what's the best way?
reach out to us. Go to dynamickpis.com. Send me an email, jeff@dynamickpis.com.
Okay.
Our website has kind of demos on there. We also have a sign up form if you want to meet with us ahead of time. We'll go over whether it's self-storage, single family, multifamily, other kind of commercial assets. We want to understand, what your needs are, and help you manage these assets as most effectively as possible.
All right. That's perfect. Well, Jeff, I appreciate you coming on. Appreciate you guys coming out to the conference in October. And yeah, I guess we will see you there at the conference in October. Thanks a lot, Jeff.
That's good. Thanks, James.
All right. I see you. Bye.